Hello everyone. As we all know, equity markets are very dynamic. They are influenced by internal as well as external factors. And we've seen quite a few influencing our markets in the last few days, weeks and months. So through this video, I thought of touching upon some of the key factors which have influenced our Indian markets as well as the global markets. Now to start with, let's look at the domestic factors. The first one was the quarterly earnings which were recently announced. So the earnings were quite disappointing, especially in the consumption-driven sectors, which sparked the valuations and market corrections. The earnings of close to 35 of the Nifty companies which have reported results have been flat year on year against the expectation of close to 2% growth. This muted revenue growth and a fall in profit has actually led to some EPS downgrades, the earnings downgrades of our markets, and experts project close to 2% to 3% downward revision of our earnings in the financial year 25. Second was if you look at the government Capex expenditure, right? We all know capital expenditure, or Capex we call, it works as a catalyst for the overall economic growth. Now for certain reasons like elections, we have seen not so great Capex by the government in the last few months. In fact, government has been able to spend only 3 lakh crore out of total budget of close to around 11 lakh crore for the financial 25. So that's just 27% of whole year budget. So there's an expectation in the next coming years, or the few months which are left for the current financial year, we really expect the government to speed up the government capital expenditures. And we have seen certain indications where the center has already nudged the departments to increase the Capex in the coming months. So that should help our economy and the markets in a positive manner. And the third important factor was the higher inflation. The inflation data which came out in the month of October showed a higher inflation of 6.21% against 5.49% in the previous month. So this rising inflation and the increase in spiraling prices of the food items have actually unsettled a bit of consumer confidence and investors' confidence in the markets, and also kind of dampened the probability of a rate cut by the central banks in the coming month. And so these are the key domestic events which influence the markets. As we make this video, the results for the Maharashtra elections also come out, which is a very positive development with the ruling ND government coming back with a majority in this large state, which after UP gives a maximum number of seats to Lok Sabha. So this should be a positive development which should help the markets to bounce back in the coming days and week. Now, if you look at the international events, right, as we said that even global events affect our markets, on all the markets globally in such an interconnected world. So while we look at the international events which happened, was the number one is the big bank US election results, where Donald Trump came back to power, and Republicans have come back to power, and with the greater majority, or with then 8 years back. So this event definitely influenced the markets, and we have seen the rally in the cryptos, in the US equities. Further, if you see, because there are certain expectations from Trump that he would probably go for some tax cuts, put on more tariffs, which would further strengthen the US dollar and help the corporates and their earnings in US. We've also seen the yields going up in US from 3.7% so levels to around 4.3, 4.4% levels. Like I said, dollars are already strengthened and expected to further strengthen. We have seen in the past, whenever the tariffs have been put in US, dollar has strengthened with other currencies, which we are seeing now, right? And so both these factors have actually made FIIs do a lot of selling in India and other emerging markets. We have seen close to 1.5 lakh crores of equities being sold by foreign institutional investors in India, and also could be a reason for the corrections we have seen in the Indian markets. And another important global factor which we would like to highlight is the increasing geopolitical tensions. We have seen recently Ukraine firing long-range missiles to Russia, and in response to the US and UK giving green light to Ukraine for using it, Russia fired back with the missiles to Ukraine and also updated their nuclear doctrine. So this actually increased the concerns globally of escalation in the war and also maybe a use of nuclear weapons in the future, which further impacts our markets and the investors. Now, keeping all these short-term events and factors into consideration, despite these challenges, we expect there are several factors which should affect or in fact help our markets, Indian markets, to rally in the coming months and years. Like we said, in the coming months, we see increased government spending, better earnings probably after a couple of quarters, and also the positive election results, etc. These should help markets to give good returns in the near future. And also, while there could be a short-term volatility, in the medium to long term, we stay positive, and investors can keep investing and accumulating in a staggered manner into the good stocks and funds. So I hope you found this video interesting, and look forward to see you soon. Thank you.